All right. Hello, hello. Sorry about that. I was watching forgot there was a delay there. I was watching the one channel and I forgot there's a delay on that one. And then I looked down at the other one and it was at zero. I was like, whoop, my bad. All right, so let's get into things. Obviously CPI is such a big thing. It is broken up our 24-hour pip changes up here. Uh the data coming in. Everybody's talking about CPI, right? Talking about the month-over-month number being lower than expected, down to point 0.1, which is good. Love that. CPI on a yearly basis, 5, which again, much better than 6 where it was previously. But again, remember we're starting to get into some of the big jumps right now, where they were kind of like, you say like, oh my god, it dropped 1%. It did, but just understand there were some big spikes last year, which is kind of changing this around. The thing that again we should be concerned about, and again, the 5.0, you may say, "Oh my god, that's so great. So much better than 6. Oh, that's awesome." Remember, it's supposed to be 2. The mandate is 2, so it's still 2.5 times what it's supposed to be. Here's the thing that we should be looking at and we worried about. The core CPI on a monthly basis. It was forecast to come in at point 0.4. It still came in at point 0.4. And again, this is continuing to grow. Core is everything, right? Not everything. Core is getting rid of the most volatile items out there, like things like energies, which we know are already up. So are the regular CPIs going to come spike as well soon? Potentially. But this is not really what we want to see. We don't really want to see the core continue to rise. And you can see it's been, yeah, it's not as bad as the point 0.5. But again, it, compared to December, again, ticking up in that direction. So again, not necessarily what's best. Now, Bailey speaking right now. You're seeing, lessons and things. We're going to get some headlines for that. And at 10 o'clock, we have CAD coming in. Now, CAD's expected to come in at 4.5. That's the forecast. That's no change. I think if that comes in, they do a halt. I can't show it to you, but that is typically a weak sign for the CAD. So seeing that come in, we should be kind of look to see where things are pushing in the next little bit. We'll jump the CAD first. We'll go to CAD, dollar CAD and CAD yen. I know that's not what we're looking at and see if there's any setups in there. And then we have the BOC press conference. And this is really where most of the movement will come from, but we'll check it out. We have G20 meetings today, by the way. I don't know if you guys saw it. We talk about the different Gs, right? There's the G7. The G7 is considered the main kind of pact. Up until recently, the G7 actually, as a pact, is kind of a group, had the largest GDP, right, in the world. Now, currently, there's a different pact, kind of on the other side, right? The one that includes Russia and China and India. Well, they have now surpassed the G7 as being the largest trade group that exists. So we talked about kind of the devaluation and the dollar being at risk. Well, the trade group that the dollar is the main part of is now actually in second place. It's no longer in first place. And the if you want to call them the evil empire, right? BRICS, they are actually now ahead of the G7 as far as GDP, global GDP. So not necessarily what you want. 2 o'clock FOMC meeting notes. So everybody's going to be looking at that one right now. Seeing this data, it's kind of like a quick pat on your back. But I think the real story of this is going to be, hey, why 5 is great, right? Yeah, it's a big 1% drop, but it was kind of, they expected it to be a big drop. That was there, and it was just a little bit more, right? They expected 1%. It was 0.9. I'm sorry. They were expecting 0.9. It was 1. Is that earth-shatteringly different? Maybe, maybe not. But this core number, right? The core number on a monthly basis will start to tick over because remember, this is the most volatile items. One of the most volatile items is energy, and we know that oil's back up in that 82 range. So, yeah, that'll get thrown back into the CPI rather soon here. So, all that cheap oil that we had last year, it's going to start catching up with us pretty quick here. So, yeah. So we got that FOMC at 2. We have Bailey speaking at 3:15, and this one right here is talking to the IMF, talking about price stability, i.e., inflation. So this afternoon is going to get a little crazy. Yeah. So a bunch coming in short succession here, starting with the CAD, and then tonight. Actually, pretty excited about this. Remember, the Aussie is already held, and the Aussie is seeing a tick up in unemployment, but a positive employment change. With everything we're seeing with the dollar right now, with this kind of massive dollar spike coming in, again, you're seeing it across pretty much across the board. Anything that is kind of counter to the dollar or with the dollar. Um, I think the biggest thing in here, looking at this, is this going to be the reversal time, right? Dollar weak all day, but then when Aussie weakness comes in, the dollar weakness should be washed out. Could this be the opportunity right here to go ahead and take a short Aussie dollar position in basically having the dollar turn and roll, right? And the Aussie getting their weakness coming in. So yeah, could be some decent stuff there. Um, Looking at tomorrow, we have GDP on a monthly basis in the UK, and the UK said everything is good. Then we have PPI. Now, PPI, again, here's that core number, getting rid of the most volatile items out there. Core, it was flat last time, and it's expected to increase by 0.2%. Remember, PPI is a little bit more looked at as far as the hierarchy of where you're looking to see where inflation comes from or where it's going. PPI is looked at more than CPI. It's not as good as core PCE. That's the number one thing that they look at. But again, PPI showing an increase, not what we want on the core number. The overall PPI is expected to be, again, it says 0, but it was minus last time, so that's technically an increase. And then unemployment claims holding firm at that 233. So, yeah. And then again, G20 meetings tomorrow and the bond auction, which, we don't really mess with bonds much here. So, yeah. Oh, excuse me. Oh, sorry. The little ones are still sick. Actually, 5 minutes before I hit the go button, Kip, I thought, was out in the clear, right? Yesterday, he was able to eat, doing good, made it through the night, no problem. 5 minutes before I hit, he had a pouch, and I gave him this little Reese's peanut butter bar. It's just a peanut butter bar. It's not really, there's no chocolate or anything in it. Melissa's like, "Oh God, come help!" And I looked in there, and he just vomited all over himself. And of course, Jen wanted to get involved, so she threw up 4 times last night. So yeah, fun stuff here. So yeah, that's what we're dealing with here in the next 24 hours, financially and obviously with the little kids. So we will see. Unfortunately, I can't show you what's moving because yeah, it's being blocked. Not blocked, but obviously when there's crazy changes, they end up moving those things around. Oh, you know what? Let me go ahead and do this real quick. I'm not on that. I'm not on that thing, but let me just click it and boom. There we go. All right. So I know somebody would ask, and I don't actually have my chat up there. So whoops. Nope, not that one. Over here. Nah, yeah, sorry, Nora. I didn't have my chat up. He was feeling better, right? I mean, he was doing good yesterday. He like real food and everything, no problem. But then Jin threw up a couple times last night. Now, the weird thing is, the last time Jin was sick, we had chili the night before. We had chili again last night, and Jin threw up again. So I don't think she's ever gonna eat chili again. Poor girl. Poor girl. Yeah. Yeah, it's fun. All right, let's go over. So, how about this VIX candle? I love this. Right? I mean, here's the channel that we drew. What, Monday? There's a channel we drew Monday. Right? I'll just extend this right across, and it's funny. Bottom, top, bottom, and then the craziness. We did the gap to the top, drop all the way to the bottom, and then we're kind of holding. So it should deteriorate now down. The news is out, but how's that for a channel? I mean, talk about craziness in a channel, right? Top, bottom, top, bottom, top, 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 bottom, top, bottom, top, and bottom in the same candle, right? How funny is that, right? Fun stuff. As far as where it is now, the news is out. Yes, there's FOMC there. We will get. We probably hold firm here until the FOMC is out. Again, that's going to also be a big release, so we're going to have to figure out what's going on with that one. As far as the dollar goes, dollar down. Now, makes complete sense. We can take this off now because it's obviously it's touched the 78.6. Really makes complete sense with where it's at right now. And all this is really back to the downside here. Right there and there, all the way across. So here's kind of, again, is it going off an area where there's buyers? Yes. Does it make sense that we're bouncing off this 101.50? Yeah, it does. Will we see a retracement up to the 2? Yes and no. I think where it is right now, with this kind of coming down as fast as it did, again, it is, yes, a parabolic move down. It was justified with that CPI number. Remember, CPI is not really what the Fed is looking at, but their mandate is kind of based off of CPI. Their mandate is 2%. Now, I think they are going to mention it. There was comments last night talking about, hey, listen, we still got our work cut out for us. We got a lot of room to run. Remember, maybe they're good. Maybe if they did nothing in the next year and a half, 2 years, it'd roll back down to 2. But there's a lot of problems with keeping inflation at that higher rate, right? It's considered detrimental. There was a lot of talk this morning talking about commercial loans, and with the rates are high now, but with a lot of the factors out there, I think the rates have the ability to go even higher just because the numbers are justifying it, especially with core. So I wouldn't be surprised if this runs back up again. I really, again, at 101.74 right now, just call it 101.75 at that quarterly mark. Would not really be surprised if we get up back into the 102 range before we talk later today. Now, Ah, I do think that the Fed is going to say go. Like we're it's there's going to be a race, right? Um, Last time there was a lot of questions about whether they're going to raise, how many more raises were they going to do, what did the banking crisis look like? Um, there's no banking crisis; it's over now, right? The banking crisis is done. There's no banks failing today that we've heard about. I don't think any are on the horizon. We don't have that catalyst to have them not do it. Um, Inflation, yes, it's coming down on a yearly basis. On a monthly basis, not so much, right? And that core number is going higher. I think they have to. I think they're going to talk about it. I think again, I think the market is like, no, we're going to go in recession. They're not going to do anything. I think the market's going to be surprised. So if this does come back in 102x is kind of an intermediary point, kind of like that middle ground, I really feel like that could be an area where we take off. Now, if we do run into sellers at this 23.6 and we push back down again and we get back down into this area down here at 101.50, we'll just bring it down to 101.50 just to make it easy here. Right there. I definitely think that's an area where we could have buying coming off of. I think if it loads itself up and we push back down again and we're sitting there, I absolutely think that that could be a takeoff point. It is a big psychological level. It's not as big as if it was a 100 number. A 50 is not as strong as a double zero, but it's an area where we now have, again, buying here, a lot of buying there, and confirmed. We barely touched that zone and it halted it and started to kind of play around back and forth. So it's an area that we need to watch out for. Okay. Absolutely, without a doubt. Now, indices, technically, everything's in the green because that number will, I guess not everything. NQ is now in the red, but everything was in the green up by a decent amount. And a lot of people are looking at that number going, oh, look at that. CPI is coming down. Yep. The Fed is done. The reality is the Fed is not done, but the overall stock market is definitely in belief that, yep, it's coming, it's working, go, right? And I think that's the wrong take that it has on it. Right now, you're seeing commodities for the most part, besides natural gas, which again, 218 is ridiculous right now with natural gas. Everything is in the green. You're seeing gold starting to roll back down again because again, the initial response is massive amounts of dollar weakness. Oh my God, they're not going to raise it. And it's like, no, they're still going to raise it. So you're starting to see those two again getting a little flat. Natural gas, oil is the only one up at 1.41 that is kind of holding firm. And again, there's a lot of other factors involved with that right now. But 82.70, I mean, we're talking about 83 bucks again. Look back a couple months and this number was much, much lower. We're talking about in the 60s, right? Um, yeah, yeah. So with it back up in the 83 range, it's like, wait a second. That CPI number? CPI is everything. Core, which is raising, doesn't include energies. Well, energies are starting to rally again. So when you look at the core moving higher, being very, very sticky inflation, and now we have oil starting to creep up as well. Remember, CPI is a lagging number. Are we going to see some spikes up in CPI if nothing is done? And I think so. I think so. So again, that's what we need to watch out for. Looking at the Aussie. Okay. Any surprise? Nah, not really. I mean, here's the zone. We talked about the zone. There's your pop up to the 61.8. Again, this is the definition of a parabolic move. We went right back up. We had a level of basing with confirmation. And again, this is one of those ones that those poor fib traders right here to here, 61.8. 61.8 level. Did it hit the 61.8? No, but it did grab the supply zone. So right now, this trade is actually out. I believe so. I think it's out. Three's right there. You can see it's past three. So it's already done its 1 to 3 reversal in that news. I do think this one rolls back down again. I think it probably resets itself coming back down. And funny enough, look, here was that old zone for news last week. And what did it bounce off of? 1, 2, 3. We're looking for hit number 4. There's hit number 4. There's the base below. So could you have traded this one long? Absolutely. Absolutely. Okay. And it's coming back down to the origin of the move is what I think. Now, if we get back into this range later on today, could we use this one? We could, but I think the message is going to be very, very clear from the Fed that they will continue. I guess he could say, you know what, we're going to go one more and then we're going to hold, right? Because other people in the world are actually doing a hold right now. I think a hold, I don't know if a hold makes sense, but I wouldn't be surprised if they say, put it this way. I think the problem, I think what's going to happen is, and the reason I mentioned this oil thing, if they say, yes, we're going to do one more and then we're going to hold, I think what's going to happen is they're going to do one more. Or maybe they'll say we're going to do one more and then potentially be open for a hold. I think what they're going to do is they're going to look to see if this oil number, this energy inflation, is going to cause it to raise next month before they make a call or decision on. So I think this one probably pulls back down again. This is a parabolic move with news. It's retracing back again. I think it resets at 66.75. I think if we can take another push up to that 76 for some reason, whatever the Fed say, if it does pop up again, I think it pops and it rolls back down again. With the Aussie news later on this evening, it's actually tonight here. With this tonight, I think this gives us all the opportunity we need for a reversal. Okay. Um, let's go to the CAD real quick. I want to do that one. So right now, again, I think this one resets. It could be another takeoff point. If we go from here to here, right, you can see it's also a 50% retracement now that we have the pop. So there'll be additional buyers stepping in that area right there. Okay. So keep that on your radar right there. 66.74. Dollar CAD. So dollar CAD. Funny enough, move down, move straight back up, and it's already retraced. Now, did it go to at a good area? Yes and no. I mean, it was a tested area. You can see right here that yes, there was another test of it. That's what it hit. It turned and rolled back up again. Has that trajectory changed on this one at all? Not so much. The way that this one is setting up right now, I actually won't be surprised if it continues to go higher. Let's see. Run some fibs on this one real quick. Yeah, that did a little bit early. So it's already pushed back up. But this is where all the basing is actually happening, right? There's where the basing's happening, but you can see the top of this one is almost the top of that one. Let's pull this off. That one is out. I think ooh, probably there. Probably there is the next area that I'd be looking for a spike to. How many pips is that? 43. Hmm. Hmm. Let me see here. Yeah, parabolic move is done. The retracement has already occurred. See how this is starting to push back down again? Hmm. This is extremely aggressive, so take this with a grain of salt. Me drawing it. Yeah, so what I'm looking at is just a very, very short term type of scalp. I'm looking to go long. It is pulling back right now. We got 5 minutes. It's going to be hard to overcome 12. It could do it. Maybe it's going to use the 23.6. But again, what we've seen with the pause is a confirmation of slowing down. And again, typically, even if they raise it to the same exact point, again, there's that big push there. So I feel like it's going to probably take off to the top side. Does it use the 23? I like the 50 better because at least it's confirmed. But again, that 23 area is at a level where it could. It's going to have to hold. And let's see, is it holding yet news wise? Not yet. It's trying. It's trying. Crap, that one may come down. Help us out here. Help us out. Push down right into that zone. It's close. It's close. But anyway, I think again, not that it's a dollar strength based move, but we are seeing reversals in dollar strength, which should punch this one higher. But again, coming in with a confirmed thing, this should be a little bit of weakness in there. I don't think they surprise us on this one. Oh, now Biden is talking about, yeah, he's not going to talk about core. I love it how he's getting involved, yeah, because he's fighting, yeah, he's fighting inflation. Let's go to let's go 30 minutes. Yeah, we're seeing the Canadian strength come back in. I think that's the pre movement. Yeah. So I mean, unless there's a major surprise that they raise the interest rate, which I don't think they're doing. Obviously, they're not lowering it. That's off the table. But I think a hold would be considered lower at this point. Um, with this rally up and hold in price, look, you can see a failure to go higher in there. I think this one shoots to the downside. Uh, yeah. If we can get a push, if we can get the negativeness, right? If we get CAD negative, look for push down, pull back up, and then pull a trigger on that one. So we'll see what comes of that in a sec. Aussie yen. All right, so Aussie yen. So yesterday, you can see we talked about being there for news. We weren't quite there for news, but you can see that it came up on Tuesday morning, 3 o'clock in the morning. It grabbed and it pushed back to the downside. So it did have its reversal. We were looking for that one. Once that reversal's in, though, we take it ourselves out. So right now, when we're basing, did it use that one? It did use that one. I knew it. Wah, wah, wah. I knew that was coming in. All right. So it looks like after this pop, the next level above would have been here, right there, and it looks like that's what we're playing with right now. So as far as this one goes, so we've had two touches on it. It's in between the 61, 78.6. So it's not, again, it's an easy drop, sideways movement, a nice strong drop again. After he had the 61 touch here, it is the next level up there. It did push back down, found some buyers, and came back up again. It's about the same spot. So I would assume that this one continues to turn and roll. We'll see. I do think, again, we're going to need some help with the yen on this one. I actually, I kind of like this one up high. Not enough room there. Ugh. 3, 48. Kind of hoping we don't break this one for tonight. Oh, that's plenty of room. That's plenty of room. So I'm kind of looking at this one if we can kind of just come in here, and then once the US market opens, we play with this level. So it's a decent base with one touch, two touches. There is a small level here, but with the green being lower, 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 it was really struggling to find those buyers. So there's a potential there's not many there, and it's just a little bit deeper. Overall, a profit taking is going to come in probably about there. So we do have room for 1 to 3 with this one. Again, you're looking at something along that, like the lines of this, right? 88.79 to 88.40. So an easy 30 pips, right? 10 for 30. Standard play there. And again, that's more of a news based trade tonight. But look for this one to roll back down. If we can get the basing in here, that's what we really, really need. Okay. Let's see if this came in. Yeah, 4.5. Yeah, 4.5. So yeah. Let's go that dollar CAD. There's that push. It's driving. The push is happening. See it pushing it down. So now's when we should get the reversal out of it. So, although, yeah. Problem right now is everybody and their mother are selling this thing. Everybody's trying to sell it. Let's see if it breaks through. Actually, the bottom should be. What do I have marked there? Bottom should be there. Let's see if this one breaks. Looks like it's trying. Looks like it's trying. We'll give this one 5 minutes to kind of teeter out. Is there a headline? Um, Flexible is hard. Okay, we need the comments to come in. Eh, it remains prepared to raise hikes if needed. So that's what people are not liking. They're like, oh, if it's not done. Okay, so that's what we're looking at. Yeah, so it did break. So it looks like it's going to go down to the bottom line. It's fine. I was hoping we get there before, and we didn't. We needed to drive down that way. So, yeah, you're seeing all this CAD strength. That's because everybody's trying to sell the CAD right now. So that's not a bad thing. Again, look for this one. I would say watch this level right here. Look for a reversal off of that because it's hard to say that the CAD is going to be stronger than the dollar. All right, so let's go back up. Euro dollar. All right, so euro dollar. So you're still seeing some dollar weakness come in. We are obviously in close trajectory to or close proximity to 110. We knew we had some levels up here, but look, obviously 1, 2, 3, 4. We're not taking this one long. If I continue that across, you can see it didn't even slow down, but it is using it, right? It is using it, which is what we would expect. Let's clean a bunch of these off now because we don't need these. I guess we could run up to there. Do we need that one? No, we do not. That one is out. Let's pull this. Look at all the basing right in there, right? This old level. I mean, obviously you weren't taking it, right? There's 3, there's 4, 5. It did pull down and use it. So we'll pull that. We'll keep that. That will remove this. This one. This. Look how it rallied back up again. Based. Harry Potter right back up again, right? Basing in an old broken level. Boom, right back up. We'll delete that. I'm going to get this off just so it's clean. Let's take some fibs. Go, whoops. Here, up. I was hoping it's just a little bit more. Get us to the 110. Yeah, the 110 is okay. I think this goes up to 110 today. We're looking for a target level right here. Okay. Yeah, so I think this gets to 110. Obviously, some sellers in there, but at this point, this is a third touch. I think we go all the way up. 110 is a great reversal point. A lot of people will be talking about it. Very large psychological number. Do I need to run this higher? Yeah, I can run that all the way up. Let's see. Hmm. Cross. Okay, there we go. Let's get the actual number on that one. So that's what we're looking for. And again, this meets the narrative, right? If we can rally up and be holding this price, put a little fail to go lower in there, you can see it 110.03 or 110.04, just slightly above the zone. Again, there's gonna be a little bit of buffer because it's a big number. If the Fed talks about continuing to raise, right? There was no banking crisis or there's no banking crisis now. We're gonna raise again. Again, the market right now is like that's it. The dollar's done. They're not gonna do anything else. This could be a nice little turn and rollover point. I think again, ideally, we're holding up here after this point, right? And again, all that is bringing some dollar strength back into the market. Okay. So again, keep going. It may actually hit beforehand and start to roll, but we want this to go up. We want it to start basing. We want a Fed to go higher, put in, and we go ahead and take this one short. Profit target on the downside comes down to 109.96. Okay. Euro pound. So euro getting a little bit in here, but you can see euro is kind of in a weird area. So yesterday or on Monday, we talked about this one being kind of stuck in kind of a definition of the curve. If I continue this across, you can see what do we do from Sunday, Monday we went down again. We found the buyers here, here. We went back up again, and now we're sitting back on the top side. We were thinking more bearish. Now there's a couple different levels in here. The 78 I can take off on this one. All right, we don't need that anymore. The bigger play, there was a 61.8 here. But right now, looking at this, you can see that we do have some, highs being kind of cranked in. We're kind of forming a base right here. It almost looks like it's setting up for somewhat of a Harry Potter where we hit, we base, and then we finally break through. Now, there's not a lot of great candles here. If you look at the other side of this one, oops, let me bring it back up to 15. If you look at this, you're like, is there any big great buying? No. Is it a racetrack? No, it's not. It's definitely not. Um, but the way that that keeps chopping down into that level right there, with these, this kind of sawtooth effect right there, it does look like this one is starting to roll. So why is that important? Well, with a nice push up, and again, the European market opened right here, right? There's your European market open. So we've done straight up right now, and now rolling a new session. There should be profit taking for the euro. So European weakness, dollar getting blasted. That's where, again, dollar weakness comes in. We should see this turn and roll, as well as the Fed potentially saying, hey, listen, we're going to do two more raises and then halt, or three more raises, or we got a lot of room to go, right? Um, who knows? Maybe the Fed says, we're going to go one more and then hold it for a long time. We're going to hold it till at least the end. Again, if they reaffirm they're not cutting interest rates till 2024, I think that's a very bullish sign for the dollar. Remember, a lot of the market thinks right now that they're going to cut it 0.75% in 2023. So yeah, we're in that second quarter, and they're like, yep, you're going to raise it 0.25 and then you're going to cut it 0.75. Yeah, that's a lot for the Fed. All right. It's a lot of whack-a-mole. So Euro's kind of setting up pretty decent. Also, we are sitting very, very high in the euro over here. We did push up. We talked about this one going higher, and it did. It broke through. It never gave us the pullback, but it did push up. And again, bounce, bounce, bounce. You're like, yep, it's breaking. There's the bounce. And then boom, you started to use it to the top side. So again, doing what it's supposed to do. Oh, crap. There we go. Just based off of price action. We can take this off now. You know what? We're going to leave that one there because magically it's right here. Mm, did it? Used it here. Here. All right. I don't need that one. Let's pull that off. So let's see what we have at 147. These are all old ones. Let's pull those right now just to clean this up. That's probably where we're at right now. Target. We don't need that one. So let's pull this. Up. We don't go up there, but it's like let's clean this up. As many objects as possible. Too. Let's go a lot. So many. All right. So all right. With us being over here. That's fine. That alert is still on. Hmm. So I like both these levels. This one has been pushed a little bit deep. This 146.56. Hmm. It has a little, but again, nice response. Nice response. And that's going to be the extreme level. So let's carry these both across. I think both those levels are fine right there. So yeah, I'd like to go just a little bit more. How much risk is that? 27. It's not horrible. Could be worse. Could be worse. Unfortunately, I can't really. Maybe I can shrink it a little bit. 60. All right. So this is a confirmation short. Wait for it to hit and then pull back. Yeah, 22. Now again, could this euro yen trade be an FOMC? Yeah, it could. It could. And again, it's the same thing with that. You're rallying up in areas of sellers, so that one's good. Pound. All right. So, any surprise with this one? No. What did it do in the European market? 3 o'clock is right there, and the news came out 8:30, right there. So, Europeans shot it straight down. Was there buying there? There was a confirmed level there. You could say, hey, listen, where's the next confirmed level? Right there. So this one actually was a new setup. You could have traded this one newswise. Look at this bounce right up to 78. We pull that out. Let's pull this off. I don't need this now. Let's take this one out. That's fine. There. Again, keep rallying. We know we got selling in here, but there's nothing clean up until up here. How much is that? 33 pips. Can we do 33 pips in 4 hours? The 4 hour ATR is 34. So yes. Question is, can we get through this though? Yeah, we should be able to. There's a little hiccup going right here. Yeah, that's where we're at right now. All right, so we're looking for this one to rally. Let's bring this up to. All right, so yeah, that's decent. That's decent. Yeah, you guys know my feeling on the 786. I don't love this one. I would like to see it continue to go through. Pop 125, 13. And look for a short. Pound yen. This one got a little bit higher. We did hit. We did hit it. That's why. Hit. Which is fine. We're looking for shorts. Yeah, that was that weird top on it. I do like this up top though. Let me see. Did go a little bit deep. Did go a little bit deep up top. All right, let's take this. The 78 is out here, so let's pull this one. Let's see if anything makes sense here. Right now, pound yen wise, I'm 423s. They got sliced right through. They found buyers right there. If this is the top, though, look at this. There is a little zone right there at the 50, which I think is pretty decent. We'll leave that there. Right now with the pound, this is one today because it is a proxy. I'm not as interested in this one. We do have this one down here tomorrow, the GDP. Right. I do think that this could be a nice little setup. Right. We have plenty of room to run till that time. But again, this is one of those ones that if you're going to look at your charts tonight, I think this is a decent area to look at for tonight. You could definitely have some selling off of that one. So, yeah, I think that's good. But I would avoid, FOMC. You don't play with this one. There's no need to do it. Play dollar-based pairs. Don't play with the proxy on the yen. Yeah, there's no point. Dollar CAD. There you go. There's your push all the way down. Right. So yeah, so see, we're hitting it. We're running into the problems right now. It is 10:30. It has been straight down again, so this makes a lot of sense for longs down here. But you can see it's having problems and it's running into them. It makes sense why it's here. We will get the press conference, so we will be getting some headlines in about in an hour. Normally it's 30 minutes afterwards. Oh, look at this, Holtzman. Inflation outlook argues. Oh, look at this. ECB needs to keep raising rates notably beyond that. ECB may accelerate from July. The danger of doing too little is the greatest. Yeah. So if you guys don't know, Holtzman is basically the Bullard, right, of the ECB. He is the ultra hawkish one over there. And if you read just this, you're like, oh, look at this. Yeah, we need to do it. We need to be more aggressive. But then you see statements like this: the danger of doing too little is the greatest. This is the kind of, I've said my piece. You should have listened to me. And then there's this. Okay. Um, that's probably why we're seeing it. Oh, and then we have Air Jordans. Man, I was looking for more of a policy statement there. Let me see what Biden has to say real quick. Where are you going with this gun in your hand? Oh, there it was. Do you see that? While inflation is still too high, this progress means more breathing room for hardworking Americans with wages higher than they were 9 months ago after accounting for inflation. About that. Yeah, his fight against lower costs, right? Insulin. Yeah. There we go. Let's go right after Republicans. There you go. You lost me right there. They're gonna hold it. Yeah, they're gonna hold the economy hostage, right? Yeah. And then what do? We put it in the green initiative, right? We put all the other stuff into the bills to fight inflation. Sure. Yeah. And that's why we're in the situation we are. Okay. All right. So dollar CAD holding at that point we talked about. Dollar Swiss doing exactly what it should. Driving straight down. We're looking for a bottom in this one. We can continue to push it down. Unfortunately, with this, we'll go back up to a 4 hour. Right. We know we have a level right here, and we've pushed this level before. It has gone pretty deep in there, right? It did set itself up with another confirmation offer. That's why we've left it on there, but it is another level. So it looks like this is whoops. It looks like this is the level that we're shooting for FOMC today. Um, and what I mean by it's funny, the Republicans are holding things reckless, but yet the Democrats can't pass a bill without throwing another 27 additional items in there that have nothing to do with the bill's name, right? Instead of just keeping it pure, even the Democrats now are starting to make comments about how, let's get the bill through without all the extra, added fat in there, right? And at the meantime, what do we have? Nations dumping the dollar as the reserve currency, which is probably the worst thing that could ever happen for our nation. Um, and giving it to China, which is like, oh. So, yeah, a little bit more here. 17 more pips. 4 hour ATR is 25, so we're within range. It should start to slow down at lunch. So, ideally, what we like to see here is a little bit of a pullback. What we'd like to see is a little bit of a pullback off this level. Here, I'll just draw it over here. We want to see a little bit of a pull off of this level, and then at like that 1 o'clock time frame, we want it to pull back down again, right? So that way, right when the news comes out, when the statement is released, we have a pullback and then an explosion higher is what we're looking for. Okay. Again, very very weak, very very weak dollar right now with the news. But again, I think a lot of this is also the market preparing, the retail trader being like, "Look at this, the dollar's done," right? Just in time for Powell to say something and then pop us. Again, is a pause bad? Sure, but it just means they're going to accelerate and raise it later on down the road anyway. Is my opinion on it. So, and again, remember, I was the one that was saying that the transitory inflation thing was the dumbest thing I've ever heard. Was it transitory? No, no. And now they're saying that we should, any talk of a pause is kind of the same. So look for this kind of pattern, and then look for an explosion at news time, right? Based off of Pal paying comments. Now, dollar US or US. Let's see, going here. All right, so I love this. This is great. Um, we have a Harry Potter trade drawn right here. Okay, now the alert triggered 2 days ago, but again, no entry, right? And it continues across. Do we have entry here? No. Do we have entry here? No. Do we have entry here? No. But what we do have is another 3 touches on that same level, and we know that the racetrack still exists. So that is a good thing. I like that. As far as adjusting this one, I don't know that I would want to adjust it that much. Um, we could potentially say, okay, listen, we're going to use this side. We know we basically have smooth sailing up to 135. So we could potentially say, hey, listen, we're going to use the top side, not this bottom side base here. But the reality of it is, I don't even mind that level of basing. I'm not concerned about this little pop up, and a pop up. So I mean, I think either one works. I'd kind of like to see what it looks like when where if it gives us like a near term base in there. I still like this one. I'm gonna re-enable this alert just to make sure that we know that it's there. Back on. I like this one for long. Like I said, we don't have the entry yet, so I mean, you should not have been in this trade yet. Yeah, I'd like to see where the new base is. But I do love that I can draw the next base here, right? I can draw the base based off the candles, and it's basically the same as this. It's the same width. You see how when I drew it up here, it just happens to be the same width. How much is that? 22, 23. I kind of. Yeah. I don't think I don't know. Yeah, exactly. I don't think it means what you think it means. Yeah, I mean, obviously, if you look the your Webster's definition of transitory, it's not exactly what politicians meant it was. They actually, in all fairness, they did admit that they were wrong, right? They did admit that they were wrong, right? Yeah. So I mean, there at least there's that. They don't admit that they're wrong often, but they did admit that they were wrong. That they had the gauge was they were off on their the data that they saw that their the opinions they formulated were off, right? Um, just like I think they're off now, right? Right. We're gonna cancel pipelines. We're gonna do everything. We're not gonna fuel the engine, but at the same time, what's happening? All the allies that typically sell us oil, right? Because remember, oil's bad. We don't want to develop oil. Oil is bad, right? So remember, all the people that were selling us their oil have basically said, "Screw you guys. We're gonna go with the other side of the coin." And now the U.S. is like, "Yeah, we have all the energy we need here. We should develop our oil industry." It's like, wait a second, weren't you guys just on this green initiative? Right? Weren't you guys just canceling all gasoline cars, but now we're gonna have to develop our thing? Like, come on, which one is it? Right? Which moving target you trying to hit here? And at the same time, what do we see? Nations across the world dumping a dollar as the reserve currency, and G7 is no longer the biggest trade bloc. It is now BRICS, the guys that we're trying to avoid. And what do we have? We have China doing 70 planes swirling around Taiwan, and the U.S. saying, "If you invade, we're going to attack you too." It's like, and France saying, "We're not going to help you. Sorry, it's all you." So yeah, yeah. I'm not exactly sure what they're doing, but hey, whatever. So yeah, still like this one break of 133.85. I think that's good. Look for that one again. It's not a simple break, guys. Remember, it's a push through a base and a pullback. Grab the buyers in there and then take that one up to 135. So I'm good with that one. Again, Bitcoin going higher because people are not liking what the U.S. is doing. New Zealand dollar down. Bonds actually down. It's funny. Dollar weakness, but bonds are going down, right? Right. Let's see, what is the dollar doing now? What do we got? What do we got? Yeah, look, see, it's fighting. It popped up and it came back down again. And that 101.50 seems like it's holding right there. And again, we want it to be at this 101.50 in time for FOMC. Oil. Look at oil go, baby. Look at oil go. Funny enough, look, there's our top. And again, we had mentioned this had pushed through. Again, touch, touch, touch. Look at all this basing in there, right? And I didn't trade this one, but the reality of it is, if we're looking for where the base is, there's your base. And what did it do? It rallied up twice, grabbed it, and took off. And magically, it did it at 8:30 today, right? Magically, why did oil take off? Is it because of the weak dollar, right? Data was there. Data was there. I think we have. Hold on. Do we have it for today? Let me see. We do actually. Look at this. Look at this. There's your forecast, and there is your again, your actual is showing a little bit of a surplus, right? A little bit of a surplus. Not much. Not much though. Not much. And what was the response? Bing, bing. So yeah. Let's see. Where do we? I guess we had this as areas of sellers. Looks like we've broken through. Actually, we hit it once and then pulled back again and then broke. So it did take. Oh yeah, look, 1, 2, right? One there. Again, pretty deep, so it's crappy. Two there. Here's hit 3, and it pulled back down, and then hit 4 is where it broke. So again, number 4 was the magic number. Johnny 5 is still alive. Oh, that sucks. So we have some selling at 83. Ugh, 83.33. Ugh, 83.50 is our next area where we're really looking for anything. Oh no. Oh, we're actually past. Oh, sorry, 83.50. 83.50. Yeah, so we'll see. I will say I don't like the fact that it is pulling back before news. We got 3 minutes and we're pulling back into a zone right now, right? Typically, when you see a surge and then the hour before it pull back, it's not what we want to see. Maybe I'm a little biased on this one. I would rather it not actually. There's your 1 minute pullback, right? Ideally, we don't want it to do this, right? We can do it on 5. Doesn't matter. Either one works. Yeah, this is not what we wanted to do. You do not want it to pull back because I don't want oil more expensive. maybe I'm a little biased on this one. So I don't know. Let's hope I'm wrong. Let's hope that I'm wrong. Is that a 23 as well? Because that could be bad also. It is a 23 as well. Ugh. None of those things are great. So yeah. Ooh. Yeah. Yeah, I know, Ernest, right? It's called politics. Yeah. How can you be the side that is all for climate accord, but at the same time, during your presidency, we stimulate the greatest boom in U.S. The U.S. oil industry, right? I just feel like that one goes down in history. It's like what? You just scratch your head, like, huh? Right? Yeah. Yeah. So we don't really want this one. Again, we'll see how it pops out in the next 5 minutes. Um, Maybe it's out, but typically you don't want to see this. Again, CPI, the Fed, is that more important than oil today? 100%. It's going to drive the markets a whole heck of a lot more. The dollar will drive this a whole heck of a lot more. So, again, ideally, this is not fundamentally the best day for news setup for inside of oil. But just as far as technically speaking goes, typically, if you have something like this where the morning, again, basically straight up in the morning and then a pullback right before news, and that pullback just happens to be at the 61 in something like oil, which is an extremely technical traded market and an area of basing. This is typically not what you want to see. But all things being considered, CPI and FOMC notes are obviously going to dominate the market today. This one is not going to be as big, but this is typically not what you want to see. You don't want to see a pullback like this one. And yeah, let's see what it was. There was the initial spike. It's probably already at its 1 to 3. It probably already kicked. Let's see what the reading was. They're only saying it's down 1 versus the 1-3 that the come on, I know you know that number. Come on, stop playing with my emotions. Come on. I love these. You saw the price already pop a little bit. Come on. Funny. All that drama, this top is finally back on again, and you're not seeing, look, pounding at 26, right? 32. Look at this. And funny, look, in the last 60 minutes, it's up, right? Dollar strength, weakness, obviously. We knew that one. And look, 40. 40. A little bit of a surplus. But again, zero point 0.6, that's not really that much. It was expected to be negative, but it came in just a little bit above. Nothing, again, nothing crazy on that one. And again, go down to that 1 minute. Look to see where it was. There, yeah. Look at the spike back and forth. This shouldn't, it's probably, let's see, did it go out? No, it didn't go its full. It just need to go back up top. So, nothing crazy on oil. So, yeah, like I said, don't love where it is. $1 more in range today. Natural gas. All right. So we do have something going on with natural gas here. So we did talk about our Harry Potter trade. It did go just a little bit lower. I'm okay with it punching through. I'd like to see a little bit of a pullback on this one. This is one we've had up there for a little while. We're looking for a break of 213, driving all the way down. And we know we have a profit target just a little bit shy of where we're at. Coming in down here at 205. 205 makes a whole heck of a lot more sense. Again, we really need the commodities to roll back down again. From that 830 window, it has been pushing back down, and I'm okay with this one. We knew that the top side, again, we knew all the spacing was up here at the 23.6, and it did. Yesterday, it just went, basically form pop, 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 and we're finally trying to break through. Now, we do have to clear. We do have to get a little bit lower and then pull back, but I think this one's in a decent spot. So if you're a natural gas trader, there you go. Pretty decent. Gold. Look at the craziness in gold. Look at this. Straight up in the air, and then boom, parabolic retracement back down. Now, this wasn't really necessarily a zone here, right? We'd already hit it. We hit it again. We hit it again. And then at the European Open here, we hit it again. So again, 1, 2, 3. This is hit number 4. Or you could say that this is 1 if you want to count this. 1, 2, 3. This would be 4. So yes, there was a short trade in the overnight, but we were not looking for that to hold again. If we move the other zone that we had there, you can see that's what we tagged. Again, parabolic move up. We retraced back down in 2 candles back to the origin of the move, and now it's going slightly higher. So right now, I would say the hard part about this one is we're kind of in the middle of a range. We know we have the sellers up top here, right? We know we have buyers down below. Let's run some fibs. That trade is out. Let's grab this here because, again, this is an easy low to high. And yeah, we're playing with that. The 61... Really, 6 right there's where the test comes in, but it's kind of a junky level because of the spike. We kind of have that. So ideally, what happens for me, I assume that this one would roll back down and hold right around that 2000. I don't see it. I mean, could we go back up the 28, 28? I don't think so. That's a little bit of a far run. So, um, yeah, I think it probably maintains and holds. It's funny. As horrible as that news was, it's right back exactly where it was. It wasn't horrible. I mean, it was good, but I wonder if we reset on this one and get another. I wonder if we repeat this pattern at 2 o'clock. Right, a fast response, but another fast response. Hmm. I do love 2000, but man, do I have a hard time. Look, I mean, we based, we hit, we hit, we hit. I feel like we're gonna base in there again. Hmm. So I think the important thing to do with this one, I don't have a setup on this one right now. I think the important thing to do is look at this one at 14, see where we are. If we are basing in there again, 2000 could be a great takeoff point. I'm just a little bit leery about it, just because we've hit it a few times already. It should base and then go down and use it as a top, because it's been a bottom here. It should become the top. So it's like, oh, it's right there. And again, right now it's 0.16, 0.26. So it's not, they're not doing as much. It looks like they're trying to roll right now. So, look at that. Parabolic move up. I don't even know if there's a name over there. 25 of 6. Look at all the basing here. Look. Boom, 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 boom. It should break. Boom, boom, boom. Yeah, it's going to break. And then there's your Harry Potter for this morning. Look at this. Drop down to that old level. Here's news. Parabolic move. Parabolic retracement. We're exactly where we were. Whoops. We're exactly where we were before the news came out. So, yeah, funny how that magically whips everybody back and forth. Let's see. Look at that now. There's your 23-6 buyers coming back in. 1, 2, 3, 4, 5. Still like this one for a break below. We can throw an alert on that one. So yeah, break below 24-6. The same thing. Look at this. Boom, boom. I think it goes down, but there are some buyers on this one. So yeah, I think these two are good. Or these two are. They look like they're trying to reset, but unfortunately, there's not a great reset level for them. Hmm. All right, indices. So today doesn't really qualify for an opening print day. As you can see, things went crazy. The 930 number is right here again. All it's doing is retracing in there. Hold on one sec, guys. One sec, my mother's calling. So here's your parabolic move up with the 830, and there's your retracement back down again. So it's just all it's doing is resetting. The market is not really sure what to do with it. As far as opening print goes today, after a parabolic move up, obviously you're not going to be trading any type of opening print type strategy. Opening print would have came in right here. If anything, there's your red, there's your green, there's your red. If you're looking for a confirmation pattern at 915, there it is. I mean, there is your right there is your confirmation. Red, green, red in a parabolic move. What did it do? It retraced it all the way back down. Actually, the origin of the move is there. There's the wick behind. There's where you're expecting price to turn. So all it's done is completely reset. I would expect it kind of to push lower because I think the writing's on the wall as far as what's going to happen. I don't know. Maybe we get some type of surge, but for the most part, I think the Fed's going to talk about it. If we continue to push much lower, though, if we kind of go out of what's normal in the other direction, at that point, maybe there's a long. I don't know. I just find it extremely hard for the Fed to be able to say, yeah, that's it, we're holding. Uh, I mean, IMF is calling for everybody to continue raising rates. Aussie has already slowed. Canada has paused. The United States is still 2.5 times above. I feel like they're definitely doing a 0.25. Maybe I'm trying to think if they say 0.25 and then hold. Hmm. Maybe there's a rally after it, but I really want to see what happens right when that statement comes out. So right now, all we are is reset. So again, no opening print for today. NQ, look at that, same exact thing, straight up again. Red, green, red. There's your confirmation of a reversal, and all it did was it pushed right back down, and now we've actually gone to the lows, right? This one, I think, again, I think 13,000. If you guys are short, I think 13,000 is on the radar today. As far as opening print goes, there is no opening print. You wouldn't have open printed this one because we were in a parabolic move already. You're already inside of a trade setup. YM, same exact thing. A little choppy though. A little choppy. This was a 915, 930 over here. The confirmation came in here, pushed back up, and grabbed the same top, right? Parabolic move up, and what do? We retrace back to the origin of the move right there, and that's where we're at right now. Again, the market says it's point up 1.8, and it's doing is looking at FOMC and be like, holy crap, what are they going to say? What are they going to say? But yeah, easy way to whip this one out. Everybody that saw that data was like, yeah, the Fed's stopping and went long today is officially all stopped out. So, again, it's play the retail trader today. And check this one out. Look at this. 8:15, 8:30, news is in. Bam! Parabolic retracement all the way back down again. And magically, it's also basing off the 1800, which just happens to be the level of all this basing right here. So, yeah, so important things to point out. ES, again, not necessarily near anything crazy. NQ, we're hovering right around 13,000, which is a big deal. Again, right around this 34, not quite as big a deal, but then the Russell at 1800. So, and gold, where's gold? Right at 2000. So you're seeing some very, very big psychological numbers out there right now in play, all based around the dollar. And you can see the dollar right now, again, it's really fighting with that 101.50, trying to get that higher. And we're seeing it kind of push off of it. So, yeah, it's going to get crazy in the next few hours. So what probably happens is things are going to slow down for a little bit. I think it's important to get back, look at your chart. If you're going to trade it today, get back and look at your charts between 1 and 130 and see where price is being driven. It should give us an idea of how the market is kind of taking that gauge. I do think it's going to be a very big retail trap today. I do feel like the overall indices, for the most part, are going to look at this one and they're going to basically be like, you're going to raise rates? Nah, you're done, right? If by some slim chance, which I don't think it's possible, even the president is saying it's still the inflation is still far too much, right? Typically, if Biden is saying that it's far too much, then the Fed believes it as well. I highly doubt they're going to say they're going to pause next time and then pick it back up again. I think what we probably hear is 0.25 and maybe 0.25 and a pause, or 0.25 and then everything is still on the table for next time we haven't made a determination. Like they just kind of leave it out there. But I do feel that the market will take that as dovish if they don't say they're doing 2 more raises. But I think we get at least one more. It's just whether or not they mention the P word, right? If they mention pause, it could be all, it could be craziness. So, all right, with that, let's go ahead and do this drawing. Look at this. We got missing some people today. Maybe Will is, all I got to say, Will said that he had the fun virus go through his house last week, I guess. Yeah, it is not the most fun, right? It is not the most fun. I'm going to give you guys 30 seconds more. I'm going to wait for this one to get to 3. Is it normal for the Dow to move similar to gold? Typically, gold and the Dow don't have a lot to do with each other. Typically, the Dow is associated with the yen, not gold. Yeah. Yeah, gold typically is associated with the dollar, right? Because typically you're looking for one of the 2 assets. One is considered risk, one is considered protection, right? Because the dollar deals with inflation. The Dow technically doesn't deal with inflation. It's not a hedge for inflation. It doesn't do anything with inflation. So it tends not to be anything that goes with gold. That makes sense. Wow, she's trying to kick your butt, Ernest. Look at that. 150,000. Good thing we are capped at 10, because I don't think you're winning those odds, right? Good thing. All right, let's close this sucker down. Ready. Here we go. I'm closing it down. Winner of today's drawing is Neuro. Neuro took it with 2. Look at that. He got Ernest on that one. All right. Leaderboard. Let's give Neuro his 25. All right, there we go. All right. So again, big day today. We're gonna get more headlines. little bit of a build. Again, 600,000 barrels is like nothing. Not a big deal whatsoever. That's tiny. So yeah, look for some fireworks here coming in with this BOC press conference. Day one G20, we're not going to get the headlines. Yeah, we're going to have this followed by this right in a row. So again, 2 and 3 should both be big things today. Pay no attention, man behind a curtain. Exactly right. So, all right, I'm out of here. I gotta get Kipster ready. Going back to the doctor today. So yeah, we'll see. See everybody tomorrow morning. Good luck with FOMC today, and don't forget there is some nice little trades tomorrow morning as well with this pound GDP followed by PPI, which is actually a very good inflation gauge tomorrow morning. So the Fed does know what it is today. All right. So thank you for joining me. I'll see you tomorrow morning. Everybody take care and be safe.